You are such an asshole!
Greetings, everybody. We are from the corporate headquarters of Glorious Hat. You can go to glorioushat.com and get yourself a fine hat like this to welcome our new Uber Lords and Thought Police. Anyway, we have a video request. If you have a video request, you can go to assholeconsulting.com. And you assholes are making me actually do my fucking work. And Glorious Carl, I'm over at Glorious Carl's place. He's like, seriously, spent the past 2 hours this afternoon looking up Deutsche Bank. Well, what's going on? I'm like, I don't know, something's happening. And he's like, well, don't you think? I'm like, ugh. And he old man that he is, he gives me an actual paper, an actual newspaper, and I'm gonna read this article. I'm like, ugh. And so to get everybody off my ass, including a client, we're gonna tell you what the hell is going on with Deutsche Bank. So this young man writes in, Cappy, what the hell's going on at Deutsche Bank? What is 45 trillion or 34 million trillion pounds portfolio of underlying assets mean? He provides a link, and so let's go explain to you what the fuck is going on with Deutsche Bank. I took notes because I had to research. All right, Deutsche Bank has been going through a lot of problems, and there are, well, how many problems we got? There are three main problems. But the most recent one came out today where Bloomberg had a report that some of Deutsche Bank's corporate clients, their financial institutional clients, not individuals, have stopped using them for clearinghouse services or derivative trading services. Now, I don't want to bore you with that. We'll get to that later. But they lost, and I think if I read the article, if I remember the numbers correctly, out of their 600 clients, 10 left. Well, that's huge news. Oh my God, the ship is sinking. And so Deutsche Bank's stock, which has already been hammered, it's down like 65% from year to date, dropped another 7% today. So you would say, well, wait, if they only lost 10 out of 600 clients, were these 10 amazing clients? It's not necessarily that. It's that this could be a portender of worse things to come. So that's why the latest bad news to hit Deutsche Bank has occurred. Now, what has also happened in the meantime, one, dwindling business. All right? Their revenues from the beginning of the year, so year end of 2015, they are down 20%, comparing 6 months ending last year, 2015, to 6 months ending this year. So that's bad. Businesses is dwindling. And then as business is going down, their profits are also going down. Their profits are down 98%. They only made $20 million last year only, but this is a multi-billion-dollar company. But the profits dropped, almost went away. They almost have no profits. Now, the reason why that is happening, say, oh my God, is this horrible? Is it Deutsche Bank? It's not necessarily just Deutsche Bank. And you'll notice that the banking industry has also been taking a toll. And I'll tell you basically a story of why, you know, among many other things. It's not just this. There's other problems going on at Deutsche Bank. But basically, a bank makes money by borrowing money from its depositors. When you make a deposit, you are lending that money bank. You're making a loan to the bank. That's still your money, and the bank pays you interest on that loan. You know, so you're 1 or 2% on your savings account or your checking account. The banks then lend out at a higher interest rate, and that's how they make their profits. So they borrow from you at 1 or 2%, or the central bank at 0, because there's just, and then which we won't get into monetary policy. But they're borrowing at very low interest rates today, and then they lend the money out at, say, 8%. So they borrow at 1, they lend at 8, they make a 7% net profit margin on the interest, and then they pay all their employees and everything like that. Now, the problem that not just Deutsche Bank, but other banks are running into is just exactly what happened at the bank I worked at. This is going back to 2013, 2012. Of course, it was a shitty bank, but they said, we're not taking any more deposits. We don't want any more depositors. We don't want any more new clients. And I'm like, why not? And the reason why is because we had all this money, but we didn't have enough clients worth lending it out to. There were no quality clients that would actually pay us back. But in Wyoming, paying back people is optional because you're a who dang diggly dang. Anyway, so that is the problem that a lot of banks are facing. Economic growth globally, or at least in the Western world, is slowing down. Our economic growth here in the United States is slowing down. Europe, oh, Europe, you're so cute. There's no booming economy there. So you can have all the money in the world. You could have the lowest interest rates and the lowest borrowing costs to banks. If you can't find creditworthy people to lend to, then you're not making any money. So there's a lack of demand from investors, businesses, individuals to borrow the money. And therefore, even though it may be a very low 1% interest rate, that's still 1% interest rate that they got to pay on deposits or money borrowed from the central bank. So they can borrow all this money if they want. If they don't have any good clients to lend it to, they can't make that 2, 3, maybe 4% if you're very lucky on the other end. The second thing, now Deutsche Bank's going through a reorg. They've cut their expenses. They've cut their staff. But understand the interest rate is only one of the operational expenses in a bank. You got to pay for salaries. You got to pay for heat. You got to have these buildings open. You have to have that cocksucking motherfucking piece of shit over at Wells Fargo go and create fake bank accounts that you never wanted in the first place. You have to have that. Hello and welcome to Wells Fargo. How can I help you? Oh, do you have plans for the afternoon? Those people cost money. And training costs money, and law departments cost money. There's a lot of fixed costs that go into running an actual physical bank. So that's why your profits are also going down. There's just no demand. The economy's not growing, even though it's funny. You guys really want to see where monetary policy fails. The government thinks, we'll just lower interest rates, and that'll get the economy booming. And all you do is you flood the banking system with money that no one wants to borrow, because why the fuck would you invest in Germany or the United States or any one of these socialist, anti-capitalist shitholes? So, but never mind. We'll just lower money. See, it's just lowering interest rates, and boom, the economy grows, huh? So, anyway, so that not only is representative over in Deutsche Bank, but the larger banking industry in general. Then there's a lawsuit. The Federal Reserve is suing Deutsche Bank. You say, well, isn't the Federal Reserve the United States, and isn't Deutsche Bank over in Deutschland? Yeah, it is over in Germany, but they also have operations here. So the federal government is suing Deutsche Bank for $14 billion, and they don't have that much money actually. So that's another reason. Now there's speculation that they'll only get $5 billion, and this is for shit. And I remember correctly, I think the federal government even partly bailed out Deutsche Bank back in TARP. And we're now suing them for all their bad business practices back in 2005 to 2008. So that's, hypocritical as that may be, that's another reason it's down. And yeah, those are the three real reasons why the Deutsche Bank stock price has taken a hit. Now, the article the client linked to was the issue of derivatives, and a lot of people are like, oh my god, derivatives. And I've done a thing about derivatives. You can search for it. I think it's like the Real Threat Derivatives Pose. You can find that on my YouTube channel. It's out there. But let's go over a quick lesson here now so we can understand this. You'll see this in the news, and it's like, do you know there's $157 trillion worth of derivatives, and the GDP is only $2.43? Oh my God! Okay, derivatives are not debt, all right? What they're referring to, when you see these numbers like hundreds of trillions of dollars, but the GDP is only a fraction. In the United States, I think it's like we have 600 trillion. Maybe we're even the quadrillion. We could be at 1.3 quadrillion. Don't quote me, but we're definitely above the $600 trillion mark, where our GDP annually is only about 17 trillion. So idiots, ignorant fucking idiots, and especially in the news media gathering institutions, even the financial news, they don't bother to explain notional value. And notional value, that is what the derivatives, the contracts, or derivatives are same anonymous with contracts. The derivative contracts are written on what is the value, the notional value of an underlying asset. So let me give you an example. When you insure your house, let's say you have a $250,000 house, all right? Your insurance policy, the actual insurance premiums you pay are not $200,000. Also, it's not every year that your house burns down and you have to cash in on your homeowner's policy, all right? All they're doing is saying that there are these contracts written on a total notional value of $645 trillion, or 1.3 quintillion, or is it quadrillion? I have to look it up. I think it's quintillion. Yes, quintillion. So they're just looking at kind of like the asset value, not the actual contract value of how much money has to be passed around. Your car insurance is another thing. You got a $40,000 car, and you have a health insurance policy on injury on your car insurance policy for, say, $250,000. All right, well, the notional value of all that is your $40,000 car and your $250,000 policy on you. So the notional value is $300,000. But you don't think about that when you're paying your, what, $60 a month auto insurance? So that's why this notional value of these trillions and quadrillions of dollars is so misleading, is because, no, there's not $675 trillion dollars of debt. This is notional value. Closely related to that, it was also in the article, and what the client wanted to know was assets under management. Okay, this is also another thing. Let's say you are, I should have looked it up. Edward Jones is a perfect example. Edward Jones manages retirement portfolios. It manages investments. It does not own it, okay? But what they like to do to make themselves bigger than they actually are, and this isn't just Edward Jones, this is every financial company, Merrill Lynch, everyone else, they say, we have $175 trillion under management. And then the same fucking idiots over in the mainstream media go, oh my God, do you know Merrill Lynch missed earnings by a penny per share, and they have $175 trillion under management? They don't own $175 trillion. It's not theirs. It's not at risk. It's not debt. Merrill Lynch and then Edward Jones or all these other companies, they manage it. They may take a 1 to maybe 3% commission off of it, but they don't own it. It's not like their risk is exposed to it. It's not like they have $175 trillion in debt. It is just what they're managing. Like, for example, you don't trust yourself. You say, hey, Aaron, you look like an honest person even though you're a fucking asshole. Yeah, it's me. I got $10,000. Would you please manage it for me for $10 a year? I say, okay, fine, I'll do that. Sure, fine, whatever. You don't say, oh my God, Aaron Cleary has $10,000 on. It's not mine. I'm paid $10 a month or a year to manage your money. It's your money. I don't own it. It's not on my balance sheet. It's not on my personal financial statement. That's all assets under management means. So what these financial management firms like to do to make it look how professional and awesome we are, is they say, we have so many trillions of dollars on them. And they do. They're managing corporations' money. They're managing pension funds. They're managing individual retirement accounts. They have trillions of dollars under management, but it's not theirs. I mean, hey, guys, over in the financial services industry, if you really want to confuse people more, why don't you convert it to won or yen, which would add a couple more zeros, because the yen is like at 100 yen per dollar now. So you could get, we have quintillion, quadrillion, I mean, you could get it up there. We have quadrillions of yen under management. Maybe you could do Argentine boliviars, which I don't know what fucking alien we'd reach by that time, but because the Venezuelan boliviars are so freaking worthless. I mean, just choose, maybe pennies. You could put in pennies, you know, could you, I mean, it's just a marketing gig. That's all it is, guys. So I am really skeptical when anyone says, oh my God, the derivatives market is X. Depends how much is actually, and I don't want to go into it. Watch my video, The Real Threat of Derivatives, and that'll explain it. If you're trading only in derivatives and you actually own it and you're the counterparty risk to it and you're underwater on these options or these derivatives, yeah, then maybe you got issues. But right now, I wouldn't worry about it. Now, I don't recommend anything. I don't recommend advice. But if you have money that you can afford to lose, you want to really gamble it, you're probably going to lose it because there are a lot of problems that Deutsche Bank has. But I have a couple people like, oh my God, it's going to be ending in the collapse. It's like, well, usually it's when there's blood in the streets, that's usually the time to start looking at purchasing. I'm not saying to buy it. Don't go buy it. But for you risk takers out there, for those of you who want to lose your money, why the hell not? You know, throw a couple bucks over in a door. Don't sell the house. Don't borrow from your 401k. I'm saying beer money, like, you know, your $200. Might be worth picking up a couple shares, see what happens, all right? But I'm guaranteeing you right now you will lose your money. I'm guaranteeing you that right now. So, but yeah, I looked at it. There was so much hubbub. I got 5 fucking emails. Everybody's saying, hey, what's going on with Deutsche Bank? What is that? That's what's going on with Deutsche Bank. It's a shitty economy. It's macroeconomic forces. It's the banking industry sucking. They have a lawsuit shoved up their ass. And then what else? Oh yeah, and then this Bloomberg report just came out. That's it. That's all it is. So, you know, don't worry about, don't lose sleep. Yeah, it could spoil into contagion, but we had a financial crisis before, and if you were smart, you guys probably might have bought some silver in that time, right? To hedge against this? Anyway, go get yourselves a glorious hat at glorioushat.com, and if you have any questions, go to assholeconsulting.com, where I, the world's only professional asshole, will give you my advice. Best of luck to all of you. Toodles.